All right, good morning, everybody. We'll get started in just a minute. All right. Oh, I think we're back. How does this sound? Can you guys hear me okay now? Does this sound good? Just give me a quick yes if you can hear me right now. We're good? All right, perfect. Excellent. Sorry about that. We are good to go. All right. Good morning, everybody. Serge from the Study Trader here. This is our Set the Market Morning Show. Top few things here this morning. First of all, make sure you subscribe to the channel and you give us a thumbs up like. That allows you to be updated in real time when we do these morning shows in real time, Monday through Thursday. All right, so first thing I want to go through CPI a little bit because the higher for longer inflation theme remains there as far as we're concerned. That's number one. Number two, I want to show you a trade that triggered this morning right after CPI, actually even before CPI with the TST trender, so I'll show you that. And then a reminder of the seasonality. So let's actually start with that. Again, this is something that we have been talking about now for days. I'm going to continue to reiterate it because I think it continues to be important. Again, very simple. What this is, the white line is 30 years of seasonality of the S&P, or the SPY, October through end of year, and we are about now here where this blue line is. I made this last Thursday, so the S&P hasn't done much since then. But the average 30-year seasonality between here, roughly, and about the 20th of December is a bit of a pullback. And I say pullback, like we could literally just flatline, right? That would even qualify. And again, as I mentioned several times, the reason for that really has to do with some of the economic data that we have coming out. We had CPI today, which I'll get to in a minute. And we have the Fed next week. So that kind of speaks to me for a bit of a potential pause. However, as you guys know, with momentum, we can trade multiple time frames. And so one thing I just want to show you guys real quick right now, for those of you that are using the TST trender, which is our momentum indicator. I'll make this a little bit larger so you guys can see this. This here is a live chart of the S&P 500 E-mini futures contract. You'll see it ticking through live. And what we had this morning at around 8:10 Eastern, we had a buy signal, and of course CPI came out. So whether I took it there or I waited until CPI came out, this is now a nicely profitable trade. It continues to work. Momentum is still there. We don't have a new sell signal, but it's probably reached its profit target, certainly if we entered there, right? So that's a nice little sort of day trade that's working. It's still working. As you can see, it's still ticking higher. So just want to bring this up for those people that like to trade momentum. If you're not using the TST trender, you can get in touch with our team, support at thesteadytrader.com, and they can help you out. So that's as far as momentum is concerned. Again, keep in mind the seasonality pattern here through a sort of one and a half weeks left here in that seasonality pattern, meaning we could remain in a bit of a sort of a consolidation period for another, week and a half or so is kind of what this would say. All right, that's the two things to start off with. The third thing is, and I'll put this up here in the left-hand corner, so for those of you guys that like to follow momentum, you can kind of see if this continues to work or not. I want to take apart the inflation thing a little bit more. If you listen to mainstream media this morning, everything's amazing. Inflation not a problem. S&P is up 0.5%. And great. And we took advantage of it, right? There's a momentum buy signal right there. So I'm not complaining. I'm just saying, that's what's happening. However, if we take this apart a little bit further, we will realize a couple things. So what you have here on this chart, and I'll make it a bit larger, is the year-over-year and month-over-month CPI. So basically, the CPI up 2.7% year-over-year, I think is the highest since July. So it's not like it's getting any better. And so that's something that, is going to probably come home to roost at some point next year for certain asset classes. And that's why we continue to reiterate that the higher for longer inflation theme is very much, it's very much there. So, again, inflation is actually accelerating from a rate of change perspective. we can look at the same thing on the second chart that I have here, which is um, showing the same thing, but this is now looking at core CPI, and core CPI is around 3.3. That's basically nowhere near 2%. Now, which is the Fed's target or mandate or whatever. I think they will be revising it up anyway, but just kind of keep that in mind. And basically what it means, and I realize it falls on deaf ears for the most part when I say this these days, but it means we need to really be considering the proper asset allocation. So that's gonna mean being in energy. That's gonna mean being in, even stuff like, stuff that I've been talking about now for months and months, which ultimately I think is going to really benefit this whole theme. Things like uranium. Again, anything that benefits from inflation staying somewhat higher for longer. Remember, we're not calling for 10, 15% inflation. I just think we're going to be in a 3 to 6, 5, 6% world for the foreseeable future. And if that happens, we're going to have a very, very different regime. Most people won't care or wake up to this until it's way too late, but that's basically what that means. So you want to take these inflation prints pretty seriously as far as we're concerned. John's asking, do you think it will continue to go up with the incoming administration's proposed tax cut spending? Possibly. I'm not sure that's really the driver. That may not help. It may be a neutral. It depends what they're doing, right? Because they can offset that to some extent. The inflation drivers are way, way, way deeper than that. It goes way deeper, right? It goes really into demographical shift. It goes into dramatic underspending of the energy grid. It goes to even something very simple, like look at the two most recent strikes, right? The dock workers and the Boeing workers. They have what, like a 8% increase per year on their wages or something like that. It's something like 50 or 60% over the next few years, right? That's nowhere near 2% inflation. So there's so many things that are working for tailwinds for inflation to stay higher for longer. Remember, I'm not calling for crazy inflation, but again, this is going to be something, and we got to confirm just now, once again, right? It's not getting better. Inflation's actually ticking just a touch higher once again. So I think that's important, so we can benefit from inflation, owning inflation, by being long. Again, it's a whole portfolio. We run that portfolio at Blue Marlin Advisors with an ETF strategy. But just to give you some nuggets like uranium, again, we still think gold will work, although I think in the sort of immediate term, gold might be in a bit of a consolidation phase. Of course, it's been going up over the past few days, right? But it still is consolidating since September, right? So that's nothing that hasn't changed. But again, something we want to own. Again, it's quite wide ranging, the things that go into that basket. What's not in that basket is high beta growth stocks, and that's really the main message. That doesn't mean that they're bad investments. But they're very much more likely to underperform now going forward for a while than they have for the past number of years, and that's critical to understand. Lastly, just wanted to touch on this whole point of momentum once again, and you're seeing it this morning. Essentially, Coinbase will. That's what I'm getting to, but Bitcoin, it's still just kind of hovering around. The mid to high 90s, it continues to get a bid. It seems to me quite likely that there could be another push higher. What happens in the new year, or once we're into the new year for a bit, I honestly don't know. We'll have to see. I think it's important to have a 2-bucket system here, meaning for me, I own Bitcoin in a long-term bucket as a diversifier, right? So I'm not that much sensitive to price fluctuations. I don't care if it goes down to 50,000. I bought it at 10 in 2020, and to me it's just at 10,000. And so me it's just diversifier, or I think I averaged 14 or 15,000. Anyway, not to brag, by the way. The point is it's diversifier, and if one is trading it, it's a near-term bucket, right? If these trends change, if momentum changes, which it will at some point, this can all be short. But in the meantime, things like Coinbase continue to work as a tracker to this, which is why, as an Inner Circle member, we're still have an options trade on Coinbase, even though it's pulled back somewhat over the past few days. Let me quickly turn this into a candlestick chart. And so it's going to continue to probably positively correlate with Bitcoin. So just want to give you a quick update on that. So there you have it. Update on micro seasonality. Again, another week and a half left in what traditionally is a little of a sort of pause period for the S&P. That's this chart here that I've been showing now for a few days. This black one. Then post CPI trade. Hopefully some of you guys caught it. If you're using the TSD trender, if you're not, please get the trender. It'll be well worth your time. I use it every day. And update on inflation with those two charts. And of course now a few words on Bitcoin and Coinbase. So hopefully this is helpful, folks. We'll see you guys back here tomorrow. If you have any questions, please let us know. Any feedback, positive, negative, anything we can improve, let us know. Please subscribe to the channel so you're updated in real time when we do these live sessions and when we have other content. Thumbs up, like, and we'll see you guys back here tomorrow morning on Thursday. Thanks for being here.